Hey everyone, welcome, welcome. All right, welcome guys. We'll get started. We'll get started in a few minutes. Welcome. Welcome everyone. Welcome everyone. We'll get started shortly here. Hey Madison, welcome. Welcome Madison. We'll get started shortly.
Thank you. Hi.
Hello, welcome, welcome. We'll get started shortly. This evening, this is the beginners class. Guys, we'll get started shortly here. We'll get started shortly. All right, we'll go ahead and get started.
Okay.
All right, 1 second here. So this is the beginners class. What I'm going to open up with is support and resistance. I'm going to share my screen here. And all right. And I'm just going to open it up for any questions. Hey, Madison, do you have any questions for me this evening?
Yeah, I mean, I'm really curious about like not particularly support and resistance, even though like I could use the practice.
Okay.
I won't lie to you, like I could still use the practice because when I'm not in class with you, I find myself like second guessing, you know?
Okay. All right.
Like I'm not like 100% solid on what phase a certain part of the chart is, but
Okay.
I am definitely like interested in like the calculations required to enter and exit a trade and to apply a stop loss, because you had told me to open a demo account and I did that.
Oh, good.
But I'm having trouble successfully using it because I need to learn to do those things.
Okay. So you're having difficulty what managing managing the trade once you get in?
No, it's more like, you know, there's certain like calculations that you have to understand, like margins and lots, lot sizes, leverage, things like that, that I have to take into account and I have to understand so that I can be successful when I am judging, you know, because even if I make a good assumption, like even if I do the whole entry and exit correctly based on what you taught us about support and resistance,
Okay.
I have to also do the calculations right. Does that make sense?
Yeah, well, okay.
Like based on what money I have in the account, based on the currency pair and the margin, the amount of leverage, the lot size.
Okay.
Oh, you went way
All
up.
that, yeah.
Oh, that's pretty.
Hey, Mary, welcome. Hey, Gerald, welcome.
Hi.
Welcome,
thank you.
guys. Okay. Okay, so calculation, so calculating your leverage, lot size, and all of that,
Yes.
Madison. Okay. And then you mentioned stop loss also.
Mm-hmm.
Okay.
Thank you.
Okay. Anyone else? Any question? Any difficulties you guys have in getting started? This is the beginners class. All right. So we're gonna just talk about how we get started the proper way. Some of the things we need to focus on. All right. So Madison, some of her concerns is basically leverage, right? Leverage, lot size, right? Stop
Yes.
loss.
Mm-hmm.
Anything else? Anything
Margin.
else? Margin. Okay, so margin. Anything else? Hey, Tracy, welcome.
David, I have a hard time finding you every day. I don't know why.
Okay.
I just like, I have to like look and look and look.
Also, I'm sorry, David, to interrupt, but so I understand there's a different calculation. Like, okay, so if I were trading, my base pair was, say I'm trading Forex and my account is in dollars, but I'm trading and my base pair is in a different currency than dollars, then I'd have to adjust my my margin calculation to account for that, right?
Okay. All right. We'll talk about that. Okay. And Mary, you mentioned you have a difficult time finding the class.
Yeah, every day, unless I go back to, and now they deleted it, I go back to your message in my message account.
Okay.
And now I don't see that either, but yeah, every day I have a hard time finding your class. I have to scroll through everything. There's so much stuff that I have to scroll through, and then eventually I guess you also have a couple of different, it looks different, but anyways, I don't know.
Okay.
I found you though.
Is anyone else having difficulties finding the classes? Anyone else? Okay.
No.
Okay, so Mary, I'm going to give you take down my number. Okay.
Okay.
All right, so take down my number and I want you to just send me a quick text when we're done. All right.
Okay.
And then I'll put you in our database so that you get alerts from us directly.
Okay.
Okay.
Where's your number? I don't see it.
I'm going to give it to you now.
Oh, okay. Okay,
Okay.
thanks.
It's 407 733
733
0185.
0185. Area code 407.
Yes, 733.
Okay, thank you, David.
Sure.
I'll send you a text.
Yeah, 407 733 0185. Just send me a quick note. Hey, this is Mary, and just add me to the to our database so that you get our regular
Perfect.
texts.
Thank you.
All right.
Thank you.
Yeah, and not only the schedule, you'll get alert information. Okay, as far as our market updates and trades we're looking at. So, all right. So just do that for me, please. All right, do that for me, please, and we'll get you taken care of. Okay. Anything else you guys want to discuss? So we've got leverage, lot size, stop loss, margin, the base pairs in dollar and other currencies. Anything else?
Pips. Please. Thank you.
Okay. Okay. So let's talk about leverage. All right. When we talk about the word leverage, what comes to mind when we say the word leverage? Anyone?
For me, what comes to mind is the first thing that came to mind always was like from physics. So exerting like a small, like putting up something small, but getting a big effect. So when it comes to trading, you put up a little bit of money, but you know, it's like you're putting up a lot of money. So that's what leverage is. And I think, so you put up a little bit of money, but the broker, you know, puts up the rest.
Yeah.
Am I right?
Yeah, absolutely. Right. So in when we trade in Forex in particular, leverage, we can use leverage, right, to get a bigger bang, all right, on our trade. But what we have to keep in mind though is that leverage can work for us, right? So it can work for us when we're correct with the trade. So we have a winning trade, but it can also work against us, right? When we have a losing trade, right? So we have
Yes.
to be very, very careful with the leverage, the amount of leverage that we get, okay? Most traders, right, if they put on a lot of leverage, they will, and they're new to Forex in particular, they will blow up their accounts, okay? So when we start as new traders, we want to reduce our leverage. We want to get the take with Forex. We need an amount of leverage. We need a certain amount of leverage to trade, and that's just how the market works. Okay, so you're going to when you trade stocks, you can get margin on stocks, okay? But in Forex, it's really leverage, okay? So as a new trader, I always recommend that traders get 50-to-1 leverage, which is the minimum you can get, 50-to-1 leverage, all right? So 50-to-1 leverage, and you can get that leverage through forex.com. Okay, forex.com. And that's the minimum amount of leverage that you can get through forex.com. Forex.com is a broker that's here in the US. Okay, so they're here in the US, right? They're regulated, right? So they're regulated, pretty popular brokerage for Forex, but that's 50-to-1 leverage that you can get. It doesn't get any higher than that. Right? I recommend traders stay in the US and do the 50-to-1 leverage, right? If you trade properly, that should be fine. If you want more risk, right? If you want more risk, you're looking for more leverage, you've got to go outside of the country. All right. And there are a couple of firms, brokers outside of the country that will give you more risk, right? Give you more leverage. But know that as you take on more leverage, right? Not only will your winners will do really well, right? But your losses will also increase. So there are a couple of companies, all right, that are out of the country. They're not regulated by the US standards, right? So they're not as regulated. So it's a bit more risky, right? But there is Hugo's Way, so HUGOS, Hugo's Way, all right? The maximum they will do is 500-to-1, all right? So that's 10 times the leverage, guys, 10 times the leverage as forex.com. That's a lot of leverage, all right? So if you're wrong, boy, that's gonna eat up a lot of your capital if you're wrong and you don't know what you're doing. All right, so that's Hugo's Way, right? They'll do maximum 500-to-1, and then Trader's Way, which is also outside the country. Okay, they'll also do 500-to-1. Okay, and there are other companies out there, but it's just a lot more riskier. But those are the companies that you would have access to. All right, but as new traders, forex.com, 50-to-1. As you become better, some of our top traders, they use Hugo's Way. All right, they use Hugo's Way. As far as lot sizes, right? As far as lot sizes, any questions on leverage? The thing to know with leverage, all right, get the minimum leverage, just the smallest amount of leverage when you're starting. All right, when you start off, 50-to-1 is fine. All right, as far as the lot size, right? The lot, and all this stuff right here, you're going to pick up. Okay, you'll pick this stuff up. This is not, it's good to know, but it's not critical, right? It's not critical. All right.
So are you saying like we won't have to like pick up a pen and paper and actually calculate these things while we're trading?
No.
Okay.
No, absolutely not. Okay. What the thing you guys want to keep in mind as new traders, everything needs to be at the minimum. All right. So don't go full throttle on everything, right? Just kind of bring everything down, do the minimum. So like your lot size, they're mini lots, they're micro lots, those are the small lot sizes, right? You want to do one lot. Okay, you don't want to do a standard lot, all right? Okay, so standard lot is every pip, every time that that pair moves, that's a pip, right? All right, so a standard lot is $10 a pip, right? So just think about that, right? Every time it moves, right? That's $10 every time it moves, right? So we don't need to trade that heavy. So you want to do a mini lot, a micro lot, just everything down, right? A lot size, you want to do one lot, right? And then you want to work your way up to 2 lots, 3 lots, 4 lots. So everything here, right? As far as leverage, lot sizes, pit, all of that, just think when you think about trading Forex in particular, minimum, everything is at a bare minimum. All right. The first, I would say the first 30 days, all right. Some traders will their learning curve might be shorter, okay, than 30 days. Some traders, it might take them 60 days to really get it. Some traders, in 30 days, they really pick things up and they get going. Everyone is different, okay? But when we trade, guys, especially for new traders, we don't want to trade for and I know we don't want to hear that as traders, right? As new traders, right? But we shouldn't be trading for money. All right, meaning that we should be trading to learn the process, right? To learn the process, to get comfortable trading, right? And then after you really get going, right, you start really trading for capital, okay? But initially you're really learning, practicing, trying to figure things out. So everything needs to be very, very at a small pace, okay? So low leverage, low lot sizes, low margins, okay? As far as the pairs, okay, we don't need to know the base currency. Like an example right here, right? As an example right here, we've got the pound yen, right? This is going to be right here, it's in dollars, okay? It's in dollars. If we bring up, so it's you're not going to have to calculate any of the foreign currencies, okay? You just trade it. Yeah, you just trade it. All the key is this: hey, buy at a break of resistance, sell at a break of support. That's it. Okay, so all of this stuff here, we don't need to focus on that. Okay, that's basic stuff. There is a good website, okay, that you guys can go to. It's called babypips.com. Okay, babypips.com. Okay, I think we've given that out already, right? Do you guys have that?
Yeah, I've been studying there.
Okay.
That's how I came to you with these questions.
Okay.
Because I'm actually studying these things now.
Okay.
Is this Forex though that you're talking about? This is Forex?
This is mainly Forex, yes, Tracy.
Okay.
This is Forex.
Okay. Okay.
So yeah, it's important. All of that is important, and this stuff here, after you start trading, you figure this out here. It's not a big deal. But this stuff in here, right? The 4 market phases that we talk about, support and resistance, okay, is critical, right? Support and resistance is really going to be what you guys need to get, okay? It is that critical to your success, support and resistance, okay? Any questions? Any questions? Any questions? Okay. So I want to talk about this, right? I want to, because Who here has questions on support and resistance? Does anyone here have any questions or doesn't understand support and resistance? Anyone?
I just need more practice.
Okay, so you need more practice. How? Tell me.
Like, I need more practice identifying the 4 phases, particularly. Like, definitely being sure what phase is what at all times.
Okay. All right, so let's bring that up.
Thank you.
Now, David, as far as time frame, we look at the 240-minute and we look at the daily for maybe confirmation or vice versa.
So the 240 and the daily. All right, so confirmation, okay. Okay, I'll go over that, Tracy. Okay. Okay, so here we should have the 4 market phases. You guys see the 4 market phases? You see my cursor?
Yes.
Okay,
Yes.
all right. This is really where I want you guys to spend time on you, because we have to get this before we move further. Okay. All right. So Madison, okay, so here is the 4 market phases, right? Here's the 4 market phases. All right, so where in here are you having difficulties with?
No,
Figuring
I'm having
figuring out.
difficulty like on the actual chart,
Okay,
especially like when I'm alone.
okay,
Like I'll second guess myself all the time. Like even if I get them right in class.
okay.
Yeah.
But
So
but okay, so this is for everyone. Okay, so so you understand what's happening here in the accumulation phase?
yes, I do.
Okay, so what's happening here?
Price is not trending, price is accumulating basically, and it's what's the word? Consolidating.
Okay, all right. So let's understand what's happening here. Okay, so we have to understand, not just know the terms, we have to understand what's happening with price. Okay, so that we can just look at any chart, right? So we can just pull up any chart without having this, and we'll know instantly. And we'll go through some examples, right? So you're not don't expect to get this right away. All right, don't expect to get it right away, but we have to practice, so that we want to get to the point with our naked eye, just visual. If we just see a chart, we'll know right away what phase that we're in. Okay, and this is important. This is very, very important. Okay, so let's go through it. Let's understand what price is doing and why this is important. Okay, so just price needs to fall. So price needs to fall, right, from the markdown phase and bottom out. This is going to be your best trading opportunity. Okay. Okay, I'm getting some background noise. Okay, so price fell, right? Price fell, right? At the bottom here of your chart. It's going to be either in the bottom left, bottom in the middle, or the right. Okay, so price came down, fell. So let's say it was at $100, came all the way down, fell, okay, to $10. All right, and now it's consolidating between support and resistance. That's your accumulation phase. All right, and what traders are doing is they're holding the price between resistance and between the support. So there's no real demand yet, right? They're just holding the price, holding.
David,
yes.
excuse me,
Mhm.
but I'm just seeing the 4 market phases. I'm seeing just the diagram.
Yeah, that's what
Not
I'm
the
going
full-
through. Yeah, I'm going through that. Yeah,
Oh,
yeah,
okay,
yeah.
sorry.
Yeah, we'll look at the actual charts in a minute. Okay, so just understand that, hey, price came down. So whenever you guys look at charts, right, look for the charts where the price fell down, right? So, you know, we always hear the concept, right? Buy low, sell high, right? So buy low, sell high. So price came down, and we are looking for an opportunity to buy when after the price fell down. All right, is what we are doing. So price fell down, it came from a high, right? So it came from a high, fell down, and now it's a consolidating, right? That's going to be your first phase, right? So that's the accumulation phase. So Madison, when you look at a chart, right, if it's not at the bottom, all right, if it's not at the bottom, if it's like up in this area right here, in the middle up here, you leave that alone. Only look at charts where the price came down, it fell, okay, and it's at the bottom somewhere and it's consolidating. That's your accumulation
I don't
phase.
see your cursor. Where's your cursor?
You guys don't see my cursor? 1 second.
No, just see the picture of the 4 market phases.
Oh, okay, 1 second. You guys see my cursor now?
Yes, sir.
You do? Okay, perfect. Okay. All right. Thanks for letting me know. 1 second here. All right. Okay. So price fell down. So price fell down, right? So only look at charts where the price came down and is consolidating at the bottom. That's your accumulation phase, right? Right? Resistance, support. And you guys know what resistance is and support is, right? So we want to buy on a break of resistance. So once the price breaks that resistance, guys, we want to be buying, right? This is the markup phase. So price came down, dropped, consolidated, right? Consolidated for a bit, broke resistance, right? Broke resistance. Now buyers are in control. That's the markup phase, phase 2. All right. Within the accumulation phase, the markup phase, we're going to have a reaccumulation. So that's new support and resistance lines, right? When the price breaks that resistance, that's an area to buy again. All right. That's phase 2. That's the markup phase. Phase 3, that's the distribution phase. So anytime you guys see you're looking at charts and it's at the top, right? The price is at the top of your screen. Just know, right? That's going to be getting into that distribution phase anytime. All right. So we want to be careful. We don't want to be buying like most traders do up in this area in here, right? We want to be buying at the bottom right here, at the bottom on a break of resistance. So phase 3 is the distribution phase when the price breaks support right here, breaks support, no longer making new highs. Now it's coming down. That's the markdown phase. Okay. So very easy to do this, Madison. Just look at just any chart that you guys take a look at. Take a look at the left of your screen, the left of the screen, and see what the price is doing. Okay, if the price is going down like this, you're still in the markdown phase. If it's going up, right, it's in the markup phase. Okay, so let's take a look at some examples. And what we have to do is we have to just keep practicing this, right? Practicing this. All right. So you guys should see you guys should see my trading screen. You guys see that monster scalper?
Yeah.
Yes.
Okay, so you guys see my screen here. 1 second here. Hold on a bit. All right. Okay, so this is pound yen. So let's take a look at pound yen here. All right, 1 second here. And Tracy, we'll go over the time frames also.
Okay.
All right. Okay. So here's our trading chart here for pound yen. Now we've got the signals, right? We've got the signals in here to help us, right? We've got the signals here to help us, all right? Okay. What phase is this? What phase is this here? What phase
Markdown?
is this? This is the markdown phase. Why is this the markdown phase?
Because price is moving lower and lower.
It's moving lower and lower. Okay. Remember I said price, we want to buy. Let me change this here. When do we want to get in? When do we want to get in the trade?
At the first break of resistance.
And where is that?
That would be after the markdown phase and
Okay.
after the accumulation phase.
Okay. Is that right? Anyone else? Mary, Tracy?
That sounds right
Gerald?
to me.
So after that really low low right there, where the candles go white, there's that line of support, and then there's a top line, horizontal line of resistance. Those first green candles above the resistance line, that's where you buy.
Okay, let's see here. Okay, so we would buy down here.
No,
All
up,
right,
up higher,
right here.
just a little bit higher, maybe, like
Right
a
here?
hair. No, a little bit lower.
Lower here.
There.
Okay, and why would we buy here?
Because now we're sure that the buyers are in control and price will continue to move higher.
Okay, very good.
And so, David, does the candle need to be completely above the resistance line, not just touch it or move above it, but it actually needs to open and close above the resistance line
Yeah,
to get into the trade?
yeah, technically, that's a great question, right? So technically, we would want it to close above resistance. Okay, so not only get above resistance, because this will happen a lot. So here's our resistance line right here. Okay, so it touched resistance here, touch resistance here, right? Here, the price broke through resistance, but they brought the price all the way back. It's amazing what they will do, right? Okay. it really is a battle between buyers and sellers. So I'm going to open this up so you guys could really see what's happening. All right. So if you look here, if you guys look here, and once you do this enough, you'll be like, oh, okay, I see what they're doing here. So here is your resistance line. So they held the price, and know that, guys, there are buyers sitting here, sellers sitting here, and there really is a battle. So buyers are looking to push the price higher above resistance. All right. The sellers are looking to push the price back down to support. That's why we always want to buy on the break of resistance. We say a break of resistance, sell on the break of support. Okay. We never got a close. It closed right here. This candle closed right at resistance. This candle closed right at resistance. This candle came all the way up here at resistance, touched the resistance line right here, and they brought the price all the way back down to support. This candle here came this white candle came all the way to that resistance line right here, okay? And it closed all the way down. It's amazing what they're doing here. This candle here came all the way past resistance, but guess what, Tracy? All right, to your question, it didn't close above resistance. They brought it all the way back down, and it closed right here at resistance. Same with this candle here. It wasn't until this candle came in, all right, that the price broke resistance and started the trend higher. All right. So yes, technically we need a break above and close above resistance to have confirmation that price has broken resistance. Okay. All right. Now do we take trades? Absolutely. We'll take trades in this area here also. Okay, but yes, we do want to break above resistance, and we need a break below support, right? We need the price to close below support to have a true buy signal. This signal here by the system didn't come in until here. All right, so we didn't get it here. It came in here. Sometimes it'll come in right on the break, on close above resistance. Sometimes we might get it right in this area here. But yeah, technically we need a break and close above resistance or below support. Okay, good question. Okay. Your stop loss. Okay, so Madison, you had mentioned your stop loss, right? If you guys are going to put a stop loss with our systems, we don't do a stop loss, right? We just get out the system. If the price comes down and closes below support, we'll get a sell signal to get out. But if you guys want to put a stop loss, you will need to put a stop loss right below support. All right, so here is support right here. Right, you would put a stop loss below here. Most traders will put their stop loss, so they'll buy in this area here, but then they might put a stop loss right below resistance, and they wonder why they get stopped out all the time. Okay, so if you're going to put this is your buying area. Resistance is where you're going to be buying. Support right here is where you're going to be selling. So we want tight, very tight entries and exits. All right. We don't want to put our buy signal up in here. All right. And our stop loss down in this area in here. We want to put our buy in here, right? Stop loss right below that support line, right about in here. Okay. So many times, guys, the price will come down, hold that support, okay, and then move the price in the direction, right? You'll get a pullback. A lot of times we'll get a pullback, right, before the buyers really take control. So if you put your stop loss anywhere in this area in here, you're going to get stopped out, okay? So just remember, if you're going to put a stop loss, put it right below your support areas, okay? And why would we put it below the support area? Why would we do that?
Because that's when we want to get out anyway.
Okay, but why?
Because that's when the sellers are in control.
Very good, Madison. Very good. That's when the sellers are now in control. Okay, so let's take a that's why this is important.
Before you move on, I'm so sorry to interrupt you, but before you move on, do you mind if I ask you one more question about the same thing?
Okay, go ahead.
What is this? You said stop out. You said people wonder why they keep getting stopped out. What is a stop out?
Well, you mentioned stop loss, right?
Right.
Okay, so a stop loss is when, right? So you would put a stop loss. So here, let's say you in this trade, here is support. Support
Right.
is at 151.90. Okay, so you can put on the platform that you want to get out. If you put a stop loss in here, let's say you want to get out at let's see here, this is what most traders do, at 152. Okay, so you would put that in on your platform that you want it. If the price hits that number, it's going to get you out of the trade automatically, kick you out. Okay, so that's your stop loss.
Okay.
Okay, that so it's going to automatically, if it triggers that amount, it's going to automatically close the trade for you and kick you out of the trade.
I see. So it's not just an alert. It's actually an automatic.
Oh yeah, yeah. It's not just an alert. Yeah, it's an automatic. It's going to so it's going to kick you out of that trade automatically. All right. If the price hits that amount. Okay. So that's why we want to put our stop loss below support. Okay. Below that support line. That way it doesn't kick us out. Okay.
Okay. Thank you. I didn't know. Thank you.
Okay, very good. Okay, this is why this is important for our entries and exits, right? So here was our buy signal here, okay, but this is where we got out. This was our sell signal because guess what? The price broke support. And now look, so technically, Tracy, here the price didn't technically break and closed, right? So here is our support line right here. Right here is our support line. But if you notice, the price came, the red candle came down through that support line, didn't close, right? It closed above here, but we still got out.
Yeah, I see that.
Yeah.
So, okay, that's okay.
So we still got out, and it's a good thing we did, right? Because look, eventually the price came down. All right. So sometimes it's going, you will get it right at resist right here. Right here, the price closed above this resistance right here. We got a buy signal here. It pulled back, price pulled back, held support. If we had put a stop loss anywhere in here, we would have gotten stopped out. Okay, we would have gotten stopped out. One second. Okay. Here. So just remember, accumulation. So every time you guys look at your charts, always look at the bottom of your screens, all right, for buy signals. Okay, those are going to be your best trades. When the price comes down, look here. When the price comes down, right, it came from a high. It fell down, came all the way down. All right. Accumulation phase. There was a buy signal that failed. The next buy signal, guess what? We got a big run. So what we want to do is this: buy at the bottom, take that trade all the way to the top. All right. So we let the price run down, come down, right? We can short it, but we won't get into that, right? So we want the price. We don't want to be buying up in this area here. That's distribution. So Madison, when you look at charts, all right, don't don't look at for the distribution phase. Look for start finding the accumulation phase. You're gonna find those at the bottom of your chart. You see that?
Right.
All right. So we want to be buying. We want to wait for that accumulation phase. Wait for it to play out. Wait for the buyers to come in. Green candles, the buyers to come in. The markup phase, right? We want to buy down, right? Right when the price breaks that resistance, buyers are in control. Markup phase. We want to be thinking, okay, price is getting high. It's getting high. It's getting high, right? We want to be looking to get out. That's the distribution phase up here. Okay, so we bought here, got out here on a break of support. The sellers came in, they took the price down. Okay, when you have buy signals that are high up here, just know that don't expect those trades to last a long time. We want that price to come down. All right, we want that price to come down. All right, now we got a buy signal here, buy signal here. We've got big resistance here, and look at this, and we're trading this. All right, so we got resistance here, right? Resistance here, and look what happens. Just know that, guys, when we have resistance and buyers come in, we can get a big move to the upside. Okay, we can get big moves to the upside. Whenever we break resistance, that's buyers are coming in, new buyers are coming in. Okay, so whenever we get through a big resistance, because this was a pretty big resistance here, you see here, you see how price never went higher here? You guys see that?
Yes, I see it.
You guys see that?
Yeah.
You see that pretty big resistance here? Pretty good resistance here. And look what happened when the buyers, when the price finally broke resistance, right? Look at this. They really jumped in. So when price, when price breaks a big resistance area like this, right, we can anticipate a big move to the upside. Okay, that's why it's critical to follow support and resistance and the 4 market phases. Okay, so here is accumulation with a bot here. And guess what? Just take that trade all the way up. Now, we could have gotten some resistance in here because we had previous resistance. What phase is this? What phase is this?
This is distribution.
Distribution. What phase is this?
Distribution.
All right. Anyone else? Tracy, what phase is this? What
You
phase
can
is
call
this?
it consolidated.
What phase is this?
Consolidation or accumulation.
Accumulation. Very good. Mary, what phase is this?
Let me look at my chart here. What one are you looking at? Oh.
Right here. What phase is this?
Oh. Okay, that to me looks like the markdown.
Markdown phase. Very good.
Is that right?
Very good. Yes, yes. Okay, so we want to be able to just look at these guys, just go through charts like this. What phase is this?
Markup phase.
Markup phase. What phase is this?
Markdown phase.
Markdown phase. What phase is this?
Accumulation phase.
Accumulation phase. See, what you have to do is just go through these, go through these, right? Some charts, there's only 4 phases. There's only 4, right? There isn't more. There's only 4. Obviously, we have reaccumulation and redistribution, but there's only 4 phases. What phase is this?
Markdown phase.
Markdown, accumulation,
markup.
Distribution. That's it. That's it.
And David, the accumulation and consolidation is the same thing, correct?
It's the same thing. Just know that consolidation is basically what's happening. The price is consolidating. Okay. Right. Okay. If it happens at the bottom of your chart, that's accumulation. If it happens at the top of your chart, that's distribution. But within those both phases, right, it's consolidating. So you can say, hey, price is consolidating, or you can say it's a cluster. I like to say it's a cluster, right? There's no real direction. There's no one in control. Buyers are not in control like here. Sellers are not in control like here. There is just a lot of confusion. Okay, so that's not tradable. So you guys will notice that in the accumulation phase, in the distribution phase, we usually don't have buy signals. Our buy signals and sell short signals will come after. Okay, so every time we get a sell signal, okay, expect a consolidation. Okay, if it happens at the top, expect distribution to happen. All right, if it happens at the bottom, expect accumulation to happen. So what's nice about this is after the price falls, right? So after the price falls, always be looking for buying opportunities. I'm going to go through some charts like here. See right here, price fell down. This is when you guys should be getting excited. After the price falls down like this, goes through the markdown phase, here's accumulation. Guess what? We know, guess what? Buyers are going to come in eventually. Our job as traders is to anticipate, right? So rather than just randomly looking at chart, look for charts that are setting up like this. All right. Look for charts that are setting up like this, where they've gone through that markdown phase. Look at this stock right here, right? It was at $28. It fell all the way to $298, $290 right now. I mean, just think about that, right? Someone bought it at $28. And you guys now, right? Because you know what you're doing, you notice you can pick it up. You didn't buy it up here, right? So you didn't buy it in the distribution phase at the top of your chart right here. You waited, you let it go through the markdown phase. And guess what? Now it's $290, right? It actually made a high up here at $36. So now you can buy it down here pretty cheap. Okay, but you would have to wait for the buyers to come in. Are the buyers in yet? Are the buyers in? Or do we have buyers coming in on this stock?
Not yet.
Not yet. How would we know that buyers are in?
When price first breaks resistance.
Price breaks resistance. Okay, let's find another one here. So that's why this is critical. You guys will be able to find the deals, right? That's what we want. We want to get those deals. That's why we do this, right? We talked about going to the mall and going shopping, right? We don't want to buy up in this area in here, right? We want to buy here, down in here, the accumulation phase. We want to get out, right? In that distribution phase, right? Wait, let it go through the markdown phase. All right, here it fell. Our sell signal here. This buy signal here was at let's see here, $9.90. Sell signal here was at $29. Right, we could have waited, buy back here at $4.33. Okay, so that's why this is important. So markup phase, markdown phase, right? Accumulation phase right here, break of resistance, right? Look here, break of resistance, buy signal right here, break of resistance, never got below support. So we never got a sell signal to get out, because guess what? It held support, buy signal, right? At 4, buy signal came in at 424. And guess what? Is at 608. This is going to be your low risk trades. Okay, low risk trades, because guess what? We are not buying it up in here, where most traders, this is what most traders will do, right? They'll buy it up in this area here. No, we want to be getting out in that distribution phase, looking for opportunities, or in that accumulation phase at the bottom. It's always going to be at the bottom of your chart, bottom left, middle, or bottom right. Okay. Tracy, as far as the time frames, okay, you want to stay on the time frame that you're trading. So if you're trading on the 240 like we do here in Monster Scalper, you want to stay on that time frame. Your entries and your exits will be on that time frame. Okay, if you're trading the daily time frame like we're doing in Stock Boss right here, all right, you want to stay on that daily time frame. All right.
So which one do we need to be on as new traders? You suggest the 240 then?
Yeah, it depends on what you're trading for. Monster Scalper for Forex. Okay, we do the 240. All right.
Okay, what about regular stocks then? Just like
we do the daily, but as you get savvy, you can change the time frames. Like right now, you know, we were trading pound yen. All right. We've got some traders that are trading it on the 240, and then some traders that are trading it on the 30-minute time frame. Okay, so you can move things around as you get good at it. All right.
Okay, so for regular stocks, then you suggest the daily then.
Yeah, it's normally what we do. But for our sniper trader, here, because we look to get in and out quicker, we can we do it on the 30-minute. The way you guys want to think of the time frames is like this. Okay, the longer the time frame, longer meaning the farther out. So a weekly, a daily time frame. Okay, those you're going to stay in a lot longer. Okay, so we normally don't do the weekly. We have a weekly time frame for Forex Dominator. Okay, but most traders will do a maximum on the daily time frame. Okay, so we call that a position trade. So we want to be in that trade a lot longer. All right, for stocks are very slow to move, right? They're very slow to move. So we need a daily, we trade them on a daily, and every trader is different, but we like to trade them on a daily time frame to give them time to move, okay? Because they move slower, okay? For Forex, the daily time frame is just too far. It's too long to wait, okay? The 240, the forward chart works as a great in-between, all right? And it's more of a swing trade, okay? So the 240 is more of a swing trade, all right? The 30-minute is more, it's somewhere between a scalp and a swing trade. It's gonna hold the trade. If we catch a trend like this one here, if we are lucky, like this is a really good trade here on the 30-minute. If we are lucky, we can hold that trade for a day, couple of days, okay? So just know the lower the time frame, the shorter you're going to be in that trade. And the longer the time frame, the longer you will be in that trade. So we can go from a scalp, swing, a position trade. Scalp, swing, position trade, okay? But all your work, so let's say you're guarding on your 30-minute time frame. Yes, can you look at the 240 as a foundation to see where price has been and where it could go? All right, absolutely. But your entry and exit has to be on that time frame. All right, so a lot of traders will get mixed up, so they're looking at many different time frames, and the execution, they want to buy and sell on the different time. No, one time.
I'm mixed up now.
Yeah, so wherever your interest. So if you look here, your buy signal on the 230 came in at 157 on the 30-minute time frame, okay, on pound yen. So on the 30-minute time frame, your buy entry came in at 157, but on your 240 time frame, it came in at 154. Okay, that's why you're going to get different entries on the different time frames. Okay, so you'll see us looking at different time frames, especially when our more experienced traders.
Yeah, that's why I get confused, because I see the different time frames. I'm like, well, which one do I need to be looking at?
Yeah, so they'll go back and forth, looking at different time frames to just paint a picture, right? They're looking to see a bigger picture of price, but they'll always come back. They'll always come back to that time frame that we call it that their trading window. Okay, their trading window.
Does this apply to if I'm not using the monster system?
Yes. So yeah. I mean, the monster system is designed to make it easy, right? So
Okay.
the big difference with using the systems. So we'll go here with monster scalper right here. The big difference is this. I mean, absolutely, knowing the 4 market phases has nothing to do with the systems. Okay.
No, I'm talking about the time frames, like what time frame to use when, and what you were describing, how you apply the time frames to your systems, like how you were saying for stocks you use the daily time frame and so on and so forth. Does that same sort of rule, if you like, still apply even if I wasn't using the monster systems?
Absolutely. What the system does for us, right? And why our traders like the system, okay? Especially with all the systems are designed differently, okay? But we'll just focus on the systems are designed to give you guys an edge, right? An edge so that you don't have to do all of the work manually, okay? So think of it as an automated process that's going to do not all of the heavy lifting, but most of the heavy lifting so that you guys don't have to. Okay, so as an example, right? All the pairs are in here, right? Most traders, guys, they only focus on 1, 2, 3 pairs, right? We can track all 40 pairs and we know in real time what the pairs are doing. If they're trending up, right? If they're trending up, if they're trending down. All right.
Mm-hmm.
So we don't have to just focus on 1 or 2 or 3 or 5 pairs. We can focus on see what all the pairs are doing. And they're broken down by their respected countries. So the Aussie, the New Zealand pairs, yen pairs, dollar, euro, and pound pairs. So everything is right here for us to see. We don't have to go anywhere else. Over here, we know the top leading pairs. So we know the Swiss yen is the top leading pair in all of Forex. This is in the entire market. The dollar pair is the second leading pair. So just on this screen right here, right, we know exactly what the top pairs are, right? And we know how they're trending either up or down. All right. In addition to that, on your screen here, everything here follows the 4 market phases. But guess what? It's color coded for us. So we know green, we got, and I'll finish with this. It's almost 8 o'clock, so I'll end with this. All right. So we know green candles, buyers are in. Red candles, sellers are in. White candles, neutral, right? So we don't have any buyers or sellers, kind of mixed. We have our support and resistance lines. Those are critical, right? But guess what? If you're doing this manually, every time price moves, you're going to have to draw in your support and resistance lines manually. All right. The system does it for us automatically. All right. But then most importantly, right, the system here is going to tell us when to buy. So we're going to get a blue arrow here when the price breaks resistance to buy. Green candles, buyers are in control. When we get a break of support, we're going to get a white arrow here to sell. All right. So you can do the same thing manually, right? But our systems are designed to automate. You still take the trades, right? It's not going to take the trades for you. You still take the trades. You still get in, still get out. But having an automated process like this makes it much easier for you guys.
Right.
Okay.
I know you're in a hurry and everything, and we all are, I'm sure, but I have this really burning question. Do I ask you now, or do you want to take it later? Or,
go ahead.
Okay. So I know you said, like, I don't have to, like, worry about some calculations, but you know, when in my studying, I was studying about how some brokers, they have, or all of them, they have like fees. Like every time you enter a trade, there's a fee. And then when you exit, I think there's a fee. And then if you're swing trading, so if the trade is going to go over to the next day, so there's a rollover fee. So I'm just thinking, like, does your system calculate all these things for the trader? Does that happen too?
Okay, so no, but
Okay.
but like in anything else, right? So there are fees, right?
Right.
So, yeah, there are fees. We call them spreads, right? We call them spreads.
Okay.
That's not a big concern. Don't worry about that. That's just part of whether you trade in any market, they're going to be fees. But
Right.
they're not. It's not a big deal. It's just part of it. It's part of what we do. Okay.
But I'm just thinking, like, all these little things here and there, and like the differences between, like, if I'm not paying attention, or, you know, couldn't things like that blow up my account, or little differences, like,
no. Fees will not blow up your account. What will blow up your account is not getting out.
Okay.
Yeah, fees will not break up your account. I mean, that's a good question, right? But fees will not. Yeah, what will blow up your account is not getting in here when the sellers get in, right? So let's say you were lucky enough to buy here, right? But then you didn't get out when the sellers came in, right? When the price broke support, you stayed in, right? This is what will blow up your account.
Right.
Not the fees.
How come, like, on babypips.com, they dedicate like a lot of time, like, to calculations and stuff, and they give you like all the different formulas, and you know, like, if this changes, then there's a different formula for it, and you know what I mean? Like, but you're saying, like, we're not going to have to calculate anything. How does this all work? Like, I'm confused suddenly, and I'm a little bit concerned. And how much capital do I need to start out with? Like, how much?
I would say small, a couple of $100 at the most. All right.
Okay.
So a couple of $100, so that.
So like 200?
200, small amount. So, you know, it's not going to break the bank. Okay. Because you're still learning, right? You're still learning. So the worst thing you can do is put, you know, 1,000, 2,000, you know, I tell traders a couple of $100, trade small, right? Learn how to do this. But yeah, there are all sorts of stuff out there that you can learn, right? Calculating pips and all of that. And that stuff, you know, it's important. Here, what we do, it's not the main concern is what we've gone over tonight. The 4 market.
So I shouldn't worry myself.
No, not
because
on that.
Because like, it looks like it's like there's like this so much information out there, and they like divide it into like preschool all the way to like graduating college, you know. But you make it so simple, and really you calm my nerves here in this class. But when I go to babypips.com, I look at all this information and I'm just like, oh my God, I'm never going to get to trading, because this is going to take me so much time to get through all this information. You know, I'm never going to start trading.
Yeah.
So that's why I'm asking.
Yeah. So, yeah, you know, and that's understandable. There's a lot of information out there. So what we want to do is kind of cut through all of the crap, you know, I wouldn't call it crap, right? It's good information to know. It's not going to help with your trading. With trading, it's all about execution. So we want to get in right, get out right. Okay.
Yeah, I wanna work smart, not hard.
Absolutely.
Yeah.
Absolutely.
Okay. Thank you so much.
Good. I'm glad that helps. Just continue to focus on support, resistance, 4 market phases. Everything else will come, right? We can, you know, we can have too much information. And with trading, we want to keep it simple,
I
right?
believe you. Yeah, yeah. I was swimming in so much knowledge that I was drowning.
I know. That's why this class is good, right? This
Yes,
is
it is.
the beginner's class. It's a
Yes,
good
it
class.
is.
All right.
Yes.
All
Thank
right,
you.
guys. Any other questions? Any other questions for me? All right. Okay, guys. Take care. Thanks for coming. And I will.
Thanks, David.
You're welcome. And Mary, go ahead and send me your send me a message so I can get you in our database. Okay.
Thank you.
All right. Take care, guys.
I
Have a
will.
good evening. Take
Bye.
care. Bye bye.
Thank you. You too. Have a great evening.
You too. Bye bye.
Bye, David.
Bye
Thank you.
bye. Bye, Gerald.